Just given the commentary that you've both given, this issue of bifurcation of capability, let's say the lack of common standards, differing rails in different jurisdictions, etc. What does an asset owner need to think about in terms of selecting a digital asset custodian at this point?
Number one is, how do you achieve asset safekeeping? So looking at legal contracts, omnibus versus segregated wallet, how does the technology work? How has security been embedded into the design of the product? The sort of understanding the cyber risk, which is, by the way, very difficult for traditional procurement team, network managers, because that's a brand new world to understand, and typically not many firms are equipped to understand the crypto risks and therefore what needs to be put in front of them from a solution perspective. And again, the last piece around asset safekeeping is resolution mechanism. What happens if the custodian goes down? What happens if it disappears? Who has the keys? You don't really lose the assets, but ultimately you need to think about it in a sort of worst case scenario. The second very important point is market access. What coins do you support? Where do you access liquidity? How do you work with the ecosystem, custodian, OTC desks, exchanges, etc.? How do I do that in a compliant way? I mean, compliant way could or should now involve, travel rule compliance, making sure that you have an ecosystem where you're not going to be dealing with, I would say, dirty coins, dirty counterparties, or touch any of the sanction activities or transaction. Third element, I would say, financial strength or financial backing around your funding, who sits behind you. Is that a hobby? Do you provide custody because you had to, or is that generally your business, and how committed are you to building and maintaining that infrastructure? And for crypto, I think it's also important to look at the insurance, which is probably overlooked in traditional world. People look at balance sheet. The reality is for crypto, it's a little bit more complicated. So looking at proper insurance and understanding the insurance market is fundamental, whether it's a specie market to insuring the private key in a box, or you actually have more of a digital crime insurance covering any fraud on your platform. And last piece, obviously, again, maybe for asset managers that operate in a more regulated world or regulated products, is the governance, risk management, and how your custodian applies compliance and financial crime mechanism to prevent any sort of unlawful transaction from happening. And I think, Paul, you mentioned earlier, transaction monitoring, surveillance, fraud detection, screening, all of that, which, to be fair, is what a traditional financial institution does on a daily basis.
The only thing I would supplement with is just the point that I made earlier, which is the fact that clients want, that kind of, trade reporting, they want their tax reporting. They want something that looks similar to what they already have. We need to keep in mind, right back from the beginning of our conversation, is that most customers wanting to use these products want to use it as an alternative asset, right? As a sideline as to other business that they're doing. They're not going to be just a crypto consumer. And our job as an industry is to make it as easy for them as possible.